What's up, guys? We must be live. Hope you had a great day. Last day, it was a green day for the stock market, and right now the market is about to open in 29 minutes. I'm adjusting my screen, by the way. The market is about to open in 29 minutes, and we will have a big day today and tomorrow ahead of us because there are two negative catalysts on Friday: the Congress extension, and number two, the CPI data that's coming, the CPI inflation data. That all has to do a lot with basically the money printing that we had through the last couple of months and years, and the very high inflation that's affecting stocks, that's affecting how the Fed will, when the Fed will taper, and the taper then, and the hike of the interest rates then affects the market. The higher the rates go, that pushes stock prices, the equities down. That's one thing you should know. So that's why the market will probably, it looks like it will be nervous today, and I think it will be even more anxious tomorrow as well. So that's one thing you should know before we jump in the topic of this video. Anyway, this is a market live stream for today, the open market live stream. The market is about to open in 27 minutes. Let's start from the crypto market, and then we'll move on to stocks. So Bitcoin was like 49K like 5 minutes ago. Right now it's at 49.4K. It seems like it will stay around there for a while. The last time that we dropped below the bull market support band of Bitcoin, it took 2 to 3 months to get above it again. I don't know how long it will take this time for us to get above the bull market support band, but it will probably take a while again if we don't drop even lower. Besides that, Ethereum is strong. AEF sitting at 4.3K. Binance BNB is sitting at 594, ADA 137. XRP trying to recover a bit. Ad absolutely flourished for the day. Luna Terra has risen a ton the last couple of days. That's one thing. That's one to keep on your watch list. Avax dropped after its 140 all-time high and now sitting at around 90. Might be a good time to buy in and start a position. Then we have other coins. Let's see. We have Wrap Bitcoin here. We have Chainlink, Algo. Okay, Chainlink trying to recover a bit from $20. From, I think the lowest that Chainlink got was like $19 or something. That was really, really low for Chainlink, and a lot of link holders aren't happy about that. Let's see how ENS is doing. ENS is one of my big convictions right now in the crypto market. $48. Okay. I think as long as Ethereum is growing, the ENS service, the Ethereum name service, which is basically Web 3.0, will grow along with Ethereum. Anyway, let's close the Binance for now. Let's open CNBC. Let's go back to Yahoo Finance, see what the futures are doing, the stock market futures are doing, and we'll move on from there. S&P futures 0.3% down. S&P futures 0.3% down pre-market. Dow Jones 0.4% down pre-market. Nasdaq 0.4% down pre-market. Russell 0.8% pre-market. I took some profit last day. I bought on the dip on Friday, and I think it was Monday too that I bought some as well. I can't remember exactly. It was only Friday. I bought the dip on Friday heavy, and I took some profits last day at around 2 hours before the market closed or something. And I'm very happy I did that because, as I expected, we will have some tough time today and tomorrow because of the inflation data will come out on Friday. So Russell is down 0.8% pre-market. We don't know how the day will play out. It might recover during the day, but nobody knows. Gold down 0.5% somehow, some way. Gold finds a way to be down. Crude oil $71, down 1.3%. Silver down 2.5%. Ooh, silver is dropping a lot, man. Look at that. That's a big drop from silver. Check this out. The last 6 months, it's the lowest that silver has been. Okay, I wonder how that makes. Silver holders feel. The fact that silver is down despite the inflation. Probably the dollar index is still rising. Probably. I don't know, but probably. Besides that, let's see. What else do we have here? We have silver. And let's go to Cnbc as well. Europe has opened negative too. One thing to keep in mind. Let's check gold as well here. Yep, that's right. Besides that, let's check the headlines on CNBC, and then we'll move on to other newsletter sites. Rapid infection rate of Omicron COVID variant is causing concerns. Nobody cares about Omicron, man. Amazon fined 1.3 billion in Italy's antitrust regulators. Okay. New Zealand to ban young people from ever being able to buy cigarettes. Ooh, okay. Uber, Deliveroo, and other gig economy firms raise strict new rules in Europe. Meet Eric Zemmour, France far-right presidential contender. No one cares. Powell's fourth major shift raises questions about the Fed's policy credibility. Let's see that. Let's check that. That was 3 hours ago. Let's see that real quick. It's not that big of an article. Should the Fed start to taper? We have 2 videos too as well. Here as well. Let's see. The Fed is expected to say next week it will double the pace of its bond purchase. I don't think they will do that. I don't think they will do it. Nobody knows, but I don't think they will do that. We'll also likely hitting at more aggressive rate hikes in 2022. If it meets those expectations, it will mark at least the 4th significant policy change under Chairman Jerome Powell's leadership. With policy so unpredictable and forecasts proving often unreliable, the Fed could be facing substantial credibility challenge. Let's see. That's the last thing the Fed cared about right now. Credibility. That was lost a long time ago, man.
Hey, thank you so much, Tyler and Gilbert. Thank you very much. I know this is the topic du jour these days. This idea of
let's hear to this quick read. It's about whether the Fed should taper or not.
Inflation and what the Fed is going to do about it. Just this week, there have been so many articles written about this idea of the Fed pivoting, this sentiment that Jay Powell, chairman of the Fed, will indeed embark on a faster taper and potentially an earlier rate rise as soon as this spring, as opposed to earlier estimates of it being later in 2022 or even 2023. What do you make of that? And are you actually changing your portfolio to account for this shift in monetary policy?
Sure. First of all, thank you very much for having me, and thank you very much for having our firm. I could tell you this, that I think that not only should they raise up the language on tapering, they should taper, and frankly, they should quit buying bonds now. Forget all this language of tapering. I wish we would retire the word transitory. We need to retire we're not even thinking about raising rates. We just need to retire certain things. And another one is the concept of tapering. We just need to quit buying bonds now, and the government needs to let the markets get where they need to get. Inflation is running at 6%, probably well over 6%, no matter how you look at it, whether it's year to date, whether it's...
By the way, if we account for inflation the old ways, inflation looks like 15% with the old basket. Right now, it's adjusted to 6.2 though with the CPI data.
Year over year rates, it is pretty clear. It is longer than transitory, and it's much hotter than their inflationary target. So it's time.
So you don't like transitory, you don't like taper. It sounds like you do like another T word, which is going cold turkey here. But what would the impact on the market be if you kind of just stripped this all away one day and said, okay, market,
sure,
figure it out? I mean, I think that's the main concern of the Fed, and of course, market participants are under this idea that there is still kind of a Fed put in place that would backstop them.
Sure. I think the whole concept is the concept of a Fed put that backstop, that in and of itself is what the danger is. It's leading to excess risk in the marketplace. It's leading to rates being artificially low. And I think that the sooner they rip the Band-Aid off and they let the markets settle where they should, the better off we will be in the long run.
Meet Kevin just went live with a title of Stocks Fall.
I recognize there could be increased volatility in the rip the band.
I mean, that's what we all want, right? I want stocks to fall right now. I have a lot of cash around. Like not last week. These last 3 days, Monday, Tuesday, and Wednesday, I sold and took profits on more than 50% of my stock portfolio. It's not like it's that big, but more than 50% of my stock portfolio right now took on profits. And now I have cash like on the side, waiting to buy the dip. I'm literally waiting to pounce and buy this dip. And I will go, man. I think this will be one of the last, if not the last, opportunities I will have to buy this dip on Friday. Yeah, things will go tough. This will be tough tomorrow. I wonder how the market will adjust. The only way it might not dip is if everyone expects the same thing. If everyone expects the market to dip on Friday and to buy the dip, then the market will not dip because everyone will be expecting it and will want to buy at that time. But nobody knows. It's a fool's errand try to time the market, but sometimes, some ways, it can happen. It can happen. Now, right now, I'm 50% cash on my stocks, on my stock account, investing account, and I'm looking to buy this dip heavy.
Mandate off and do it now, but that's what's best in the market as a whole. If you look and you regress over the last, say, since 1960 to today, and you regress GDP with the yield of the 10-year, and you just look at that relationship, and it would show that based on where economic growth is now, rates should be significantly higher, several hundred basis points higher. And so the sooner they get out of the way of the markets, the better off the markets will be.
The notifications on Yahoo Finance are interesting. Apple might be the only company that can take VR and AR headsets mainstream. I wonder how that will happen. Instagram chief Adam Moser grilled in Senate. Our kids are in cash flows. US jobless claims, another 184,000. Americans filed new claims, 220,000. Okay. Give me a minute, by the way, I'll check something. Just give me a minute real quick, boys. And done. Okay, let's move on. Let's see what our favorite stocks prices look like pre-market. Pre-market, that's interesting sometimes. The market's about to open in 17 minutes, so we still have time to go. Let's see what we have around. What kind of price do we have today? Intel gave up a lot of its gains and will probably give up all of its gains. It went up in a weird way, kind of quick with the Mobileye news, but yeah, I expect it to give up its gains soon. Let's see, Facebook, Tencent, Palantir, Honest, Etsy. I like all the stocks. I am opening them in a new tab so we can check them one by one. By the way, definitely check the video that I made that's about stocks to buy to swing trade easily on this last tip. It's one of my last videos. Besides that, let's move on. Foot Locker dropping again. So stocks will probably have a hard time, all of them. Intel down 0.3%. I think those losses will pick up today on the indexes. Let's see. Alphabet, flat. Alphabet is flat. We have the CPI data release. The estimation from Bloomberg is 6.9%. That's even higher than the last month when we had 6.2%. So that will bring some drama for the market for sure, based on what happens. Even if it goes like 6.5, even if it goes below the estimation, I think the market again will have a tough time digesting that throughout the day. Anyway, let's move on. And by the way, the next week Jerome Powell is also will also speak, and he'll probably accelerate the taper, just so you know. So that will make the market stuff again. This is one of my favorite ETFs right now, the semiconductor ETF. I'm buying every time it goes below 25. Nvidia right now 316, giving up some of its gains. AMD, same thing. Those two usually go together. Costco 528. Costco is very overvalued at this PE. It's the highest that it has been throughout time. And I took my profits on 540 for Costco. Apple also at the highest PE that he has ever been, 31. That's insane for Apple, man. Let's see what we have next. Meta, Facebook, 23 PE. That's a good PE for Facebook. You could say that it's been a great opportunity to buy Facebook at $300, man. It's been great. You could say that it's been a great opportunity to buy at that price because it's like 20, 21 PE. That's good for Facebook with all the cash flow that it has. Tencent rising today somehow, some way. Let's see how Alibaba is doing. I'm interested to see how Alibaba is doing today. Palantir trying to recover some way. Honest dropping, will probably drop to 770 or something. That's a price that would be attractive for me. Besides that, we have Etsy flat. We have Robinhood 2330, giving up some of its gains too. I'll probably buy Robinhood at $21 or $22 if it drops again, because I think it will be a great swing trade. Corsair trying to recover. SoFi giving up some of its gains. I'm looking to enter SoFi again at 1470. I took some profits last day. Skills I would go for, let's see, I would go for the lowest, like $8. I bought some at $8 last day. I'll buy some at $8. Let's see, Tattoo Chef here, 16.20. Okay. Tattoo Chef 15 is a price that it's interesting for me. Even lower is even better. I think it even touched 14. Yeah, it even touched 14.80 for some time. Let's move on. Dropbox. I don't pay that much attention to Dropbox. Unilever. Okay, those are some defensive stocks. Let's go and see Alibaba. Let's check how Alibaba is doing, right? Alibaba here. Let's see. Baba 125. Right now, Baba 124, giving up some of its gains last day. It went from 121 to 127. But right now it's going down just a bit, just a dot. Okay, the market's about to open in 13 minutes. Let's go ahead and see and read some news. See what's going on. We read that CNBC article. Let's see what the headlines are on Barron's, and then what the headlines are on CoinDesk as well. Let's open CoinDesk. Usually has some interesting news. Not the best ones, not so interesting, but some are good. Let's see. It looks like the CoinDesk news are different to other newsletters. Anyway, CleanSpark aims to grow to new sites. Aims to grow Bitcoin mining output over 20%. Okay, crypto derivative firm Paradigm raises 35 million, addressing clients' fear, uncertainty, and doubt. FUD about Bitcoin. Let's read that. The three types of crypto investors. The moon boys, the long-term guys. It will be funny reading that. Decentralized travel site D-Travel says it has 250k homes available to book using crypto. MicroStrategy says it bought 100,400 Bitcoin since November 29th. MicroStrategy is buying even more. Avax, Ava Labs among startups chosen for Mastercard's crypto accelerator. That's interesting. For Avax, Bitcoin hash rate, that's bullish. Bitcoin hash rate approaches full recovery from China crackdown. Coinbase Ledger integration looks to boost crypto self-custody. Considering how many the government has invested, not the government, let's say government entities or kind of big investors have invested in Coinbase, it's weird seeing that it now has ties to Ledger. Anyway, wallet maker Ledger launches crypto-linked debit card for US and EU. Crypto-linked debit card. Okay. I wonder though why someone would pay with his crypto that he hasn't stored on his ledger, because they can't be staked, they can't be lended, so there is no more cash flow coming in. I don't know, whatever. Addressing clients fear, uncertainty, and doubt. FUD about Bitcoin. Let's see that. FUD number one: Bitcoin will eventually be prohibited. In my experience, the greatest gulf between but a careful examination of the facts reveals that the risk of widespread prohibition of Bitcoin is nearly zero. First, we can look to history. Prohibition in the United States and other countries has been ugly. It has caused the spread of organized crime and ultimately has been ineffective. Just look at alcohol prohibition in the US in the 1920s and 30s, or the war on drugs that is going on today. Prohibition is of an already widespread product that people demand doesn't work in the long run. That's right. Bitcoin, FUD number two. Bitcoin will lose out to competition and face obsolescence. Bitcoin is the MySpace of digital money. Well, not really. First, Bitcoin is not the first digital hard money. Far from it. Bitcoin predecessors like DigiCash and eGold launched and failed in the 1990s. And BitGold and Bitcoin money were designed and announced but not implemented. Liberty Reserve managed to transfer billions of dollars worth of value in the early 2000s before being taken down by law enforcement. Suffice to say that several forms of digital money gained some traction before failing, but none has come within 2 orders of magnitude of Bitcoin trillion-dollar network value. That's true. Let's see. Bitcoin's second, despite the thousands of additional cryptocurrency launched subsequent to Bitcoin, none has approached Bitcoin's adoption level. By the way, let's check the Bitcoin chart for a bit right now when we still have time before the market open, and see what's going on. Let's go to bookmarks, and from then let's open Bitcoin USD. And let's go and open Pi cycle top indicator as well. That's good for now. Let it load a bit. So we see Bitcoin giving up some of its gains here as well on this small. I'll make this one a little bigger. Not that bigger. Let's go to 2 pixels. So this resistance line rejected Bitcoin, and now it's going back to test the 48.4K. That's not looking that good in my opinion. We have some great supports below, but how long can they hold when the short term is looking so, how's it called? So, oh, by the way, if we draw a line, can a line be drawn here? No, it can't. It will go this way. It will go this way and not this way. But we might be able to draw a line here. Let's see. Let me get my line seen. Trend line. We might be able to draw a line. Does that work? Can it work? No. No, it doesn't look that good. Anyway, this doesn't work. But short term, Bitcoin is looking bearish, in my view. We'll spend some time around here from 50, unless we break below above 54.2k and we pass through the bull market support one and stay there for like some days, then things are looking that good short term for Bitcoin, which is sad, but it's a truth. It's a truth. Let's take the Pi cycle top indicator. It's usually a great time to buy when it touches the bottom of this indicator, when it's below or at the bottom of this indicator. That's usually a great time to buy, according to the history, right? Look at this. It was a great time to buy then. It was a great time to buy at 30,000, according to this chart. It was a great time to buy at 40k after we went to 53k and then dropped below. And now it looks like it's a great time to buy again because it's still in an uptrend. Besides that, let's go back to the articles that we were reading and see what's going on there. Despite the thousands of additional cryptos launched subsequent to Bitcoin, none has approached Bitcoin's adoption level. That may be because every new or future offered by these alleged competitors make a sacrifice in terms of decentralization or security. That's true. That's reasonable. Bitcoin's design explicitly prioritizes security by not offering Turing complete functionality. And it prioritizes decentralization by limiting the amount of data stored in the blockchain. Not only was this limit embedded in the original design, but the Bitcoin community had a vicious fight over this characteristic. The result was Bitcoin's dramatic outperformance versus Bitcoin Cash, the group that forked off the Bitcoin blockchain as a result of the conflict. Because of the strict limitation on the size of the data structure, the total Bitcoin blockchain comfortably fits onto a standard desktop computer, which makes it easy for people to run Bitcoin nodes, to run network nodes, increasing network resilience. And if current trends continue, a standard smartphone will be able to run a node before the end of this decade, because it will be more and more powerful throughout time. Alternative cryptocurrencies that offer greater, by the way, it's good to mention here that Apple has prohibited mining apps on its app store, basically. That's something interesting to know. Alternative cryptos, let me check if the live is working well. Yeah, everything's looking good. Alternative cryptos, where are we? Alternative cryptos that offer greater future functionality require large data structures. Okay, after 30 years in the field and numerous attacks on the network, Bitcoin continues to dominate digital money. No other system comes close. That's true. How many network effect-driven assets have reached 1 trillion in value and subsequently been replaced? Perhaps someday something will replace Bitcoin, but for now, Bitcoin seems unsolvable. I agree. Bitcoin faces risks from quantum computing. Quantum computing has always been a risk to Bitcoin and the entire digital asset ecosystem. The digital signature algorithms, elliptic curve digital signature algorithm, or ECDSA, and Schnorr, or which Bitcoin transactions depend, can be broken with a sufficiently powerful quantum computer. While quantum computing is still in its infancy, some experts believe such a sufficiently powerful quantum computer broadcasting a transaction to the network. Whatever. Conclusions. While the foregoing fads or risks are the most feared by clients, I put the cumulative probability of any of them significantly impairing the value or functioning of Bitcoin within the next 5 years at less than 5%, and I put the cumulative probability of destroying Bitcoin in that time frame at less than 1%. Bitcoin is one of the most resilient and hard-to-kill systems on Earth. It's likely to take much more than the threats described here to pose any significant risk of failure. In the meantime, in my view, the signs point to Bitcoin becoming the world's preferred form of digital money. Let's move on. 3 types of crypto investors. That will be interesting. The crypto curious. The crypto curious investor is someone who has expressed some interest in investing in crypto but has yet to try. Their hesitation may be due to a fear of losing money or a fear of the technology. Okay. The crypto newbie. You will encounter some clients and prospects who have already started dabbling in crypto or on their own. When you make it clear that you're learning how to make digital assets part of your practice, you'll be surprised how many of your clients prospects will break out their phone to show off their Coinbase or Gemini accounts. The crypto native. The crypto native is someone who has skin in the game. That's how they're calling him. This is a client who has been in crypto for some time and could be moderately or extremely wealthy. Sometimes referred to as a whale. No, not every crypto native is a whale. So much of the focus on crypto education for advisors has been on helping those clients who want to make a small allocation. That was a good and fast article. Benefits for your practice. The decision to invest time and money to learning a new asset class might seem difficult given the view of the relatively small allocation to crypto. Crypto is basically a sector of investing where first you invest and then you learn, usually, both on Ethereum and Bitcoin. I highly suggest that you start with those big ones before you go to the small ones. But at the end of the day, I'm not a financial advisor, so this shouldn't be taken as financial advice. However, as we have discussed with these three types of crypto clients, a potential to add revenue via project fees, hourly fees, service contracts, or AUM is apparent. By better understanding this type of investors, by the way, the market is opening, the stock market is opening in 3 minutes. By better understanding this type of investors, you can add new clients and generate additional revenue from existing clients while keeping them from walking out the door. Most importantly, you are able to provide value and advice in ways that are much stickier. Okay, whatever. MicroStrategy says it bought 1,434 Bitcoin since November 29. The company held about 122,478 Bitcoins as of December 8th for a value of about 6 billion. And let's check the market cap of MicroStrategy right now. This will be interesting. So basically, that's the latest buy, 1,400 Bitcoin. That's the latest buy. MicroStrategy, the business intelligence software company that's taken to accumulate Bitcoin, said it bought 1,400 Bitcoins between November 29th and December 8th. The company paid about 82 million in cash at an average price of 57.400 per Bitcoin. It said in a statement. As of December 8th, the company held approximately 122,478 Bitcoins, purchased at an average price of 30k per Bitcoin. Bitcoin is currently trading about 49k, valuing the trove about $6 billion. The company raised funds for the purchase by selling shares. In the third quarter, the company added almost 9k Bitcoin to its holdings at an average of 3,000 a month. They are still buying Bitcoin, man. Michael Saylor is still out there buying as much as he can. It's amazing. Avax, holding, by the way, MicroStrategy. Let's check how the markets are looking for 1 minute before the open. And then we check the MicroStrategy's market cap. S&P down 0.3%, Dow Jones 0.3% down. Basically, every index is 0.3% down, besides Russell, which is 0.7% down. And now let's take MicroStrategy. Still buying Bitcoins. 620 for now, and the market cap is 6 billion. Okay. Let's move on. Ava Labs among startups chosen for Mastercard's Crypto Accelerator. This is a fast article, so let's read it. Mastercard is teaming up with 5 startups to solve global blockchain challenges as part of the payments giant Start Path Crypto program. Mastercard launched this program in 2014. Okay, it's a way to help later stage startups scale their businesses. Now the company Start Path Crypto unit will be working with smart contract builder Ava Labs, AI-focused mobile banking app Envo on these apps. Ava Labs is best known for building the Avalanche blockchain, an Ethereum competitor that facilitates decentralized application dApps and the creation of custom blockchains on its ecosystem. The total value locked on the Avalanche DeFi ecosystem is around 12.6 billion, according to DeFi Llama. Whether it's enhancing financial freedom or a new value-added service using stablecoins, we believe. This is boring. Let's see that. Competitor Visa launched a similar accelerator program, Fast Track, in 2019, 5 years later. Okay, and has been adding to its list of its partners, which include crypto lending program Cred, platform Cred. Okay. And Bitcoin Lightning startup Lastbit. Mastercard is setting an example for leaders across all industries on how to embrace rather than combat innovation. That's true for those payment processors. The market is open, so let's go ahead and check what's going on with the prices. Things are looking decent for now. 195 for PayPal, it has recovered a bit. 319 for Nvidia. Things aren't looking really negative right now, but we'll see how they will play out. Apple still keeps on going to set new all-time highs and is approaching $190 really fast. Alphabet 29.54 on the other hand. Alibaba giving some of its gains from last day. Let's see. Tesla, I would like to enter Tesla at 910, 920. This might get filled and drop down there. 910, this would be a good place to enter Tesla, for me at least. Let's draw an horizontal line here. That's a good line. Ooh. So basically, let me... The highest that Tesla had been was 900, and now the highest that it has gone to is 1242. This is incredibly strong stock, by the way. Now it's more than 20% below its all-time highs, right? Yeah, that's right. But it found some way. It's down 1% now, probably recover throughout the day. Or drop, actually probably drop throughout the day if we have a negative day. A firm 25% up from like 3 days ago. Enphase recovered from 3 days ago as well, from the Friday that we have. Robinhood giving up. No, is it giving up some of its gains or not? Yeah, it's giving up some of its gains. Opened lower. SoFi 1670 opening lower as well. Basically, those shrink stocks, those small cap stocks are all kind of struggling here, because of the nervousness in the market that we'll have with the CPI data tomorrow. So things are looking kind of slow. Things are looking kind of slow today, for now at least. I'm not making any moves just yet. Let's check the current price of this is 26.2. Okay. So there is nothing that interesting right now. Bitcoin hash rate approaches full recovery. Let's move on with the articles, right? Bitcoin hash rate approaches full recovery from China crackdown. Mining difficulty is likely to increase this weekend as capacity recovers, but given record high Bitcoin prices, that won't discourage miners. Look at this, man. That looks cool. Let's see. Bitcoin hash rate. This is a Bitcoin hash rate. The Bitcoin hash rate, a measure of computing power on the network, has almost completely recovered to its level in May, when Chinese authorities started the crackdown in the industry. At the time, China was the biggest Bitcoin miner in the world, accounting for 71% of the global hash rate. From May to June, the global hash rate roughly halved. The data from mining pool Bitcoin.com shows as Chinese miners went dark en masse to comply with government orders. Since then, it's been increasing steadily as they set up operations overseas and North American miners deployed their mammoth operations. In the past 3 days, the hash rate has averaged 182 exahashes per second, close to the May 190 exahashes per second data from Bitcoin. As the hash rate increases, the difficulty of mining a Bitcoin block also increases, in order to keep the time required to mine a block fairly constant. The difficulty increased by 1.5% on November 28 after 9 consecutive increases, said OK Link. That's good for the security of the network. The drop coincided with widespread domain name service attacks on Chinese mining pools, Wang said. Wang expects the difficulty to increase this weekend by 4%. Arcane Research Charm expects a 7% increase. But even after the adjustment, mining is still so profitable that everyone and their grandma will want to plug in their machines as fast as possible. It definitely looks like the hash rate will hit an all-time high before the new year. That would be incredibly bullish for the Bitcoin network if it hits an all-time high before the new year. Unless we get another brutal Bitcoin sell-off shortly after the next difficulty adjustment. Let's move on. Bitcoin wallet maker Ledger launches crypto-linked debit card for US and EU customers. I don't know how safe that will be. Notably, Crypto Life's cardholders will be open to a line of credit using cryptocurrency as collateral. Ledger, best known, I actually have a Ledger. Ledger, best known for its suite of hardware wallets, is launching a crypto debit card called the Crypto Life Card. The company announced Thursday. Card users will be able to pay cryptocurrency to more than 50 million retailers and online stores. The initiative is the latest among crypto companies looking to both serve a growing demand and move the needle of crypto. Ledger raised 380 million early this year in a Series C round, saying at the time that it would expand its services. Notably, cardholders will be allowed to open a line of credit to get cash to spend on the card, using cryptocurrency as collateral, with rates starting at 0%. The card will be available to customers in the UK, France, and Germany in the first quarter of 2022, and for US customers in the second quarter. Crypto Life will initially support Bitcoin, ETH, USDT, EURT, USDC. EURT, I didn't know that existed. The company said a waitlist is currently open. That's interesting. Ledger Chief Experience Officer Ian Rogers told CoinDesk that the company began as an option to hold, but that users increasingly want to do more and more with crypto. That's not bad news at the end of the day. Let's check the headlines on Barron's and then we'll go back to stocks for a bit. If it ever loads and refreshes. Right now, Bitcoin is sitting at 48.9k. it will probably test the 48.4K level, as I said earlier on the start of the stream. Ethereum is at $4.260. S&P down 0.2%. Down, basically every index is down 0.1 to 0.3%. Besides that, we have yeah, that's all actually. Wait, did I open Yahoo Finance by accident? Google not dropping that much. Google staying stable at 2960, a little bit below $2 trillion market cap. Let's check this out. Apple wins a round in payments fight with Epic Games. Okay, the pain isn't over for big tech stocks. I believe so as well. Stocks, FDA authorizes AstraZeneca, inflation data lie in wait. Okay, what happens when stocks delist? Alibaba stock looks like screaming buy. I agree with Barons here. Let's start with Apple, right? Everyone cares about Apple at the end of the day. And let me check if the live is going well. Yeah, the live is working. Apple wins a round in payments fight with Epic Games. Apple has been on this huge lawsuit with Epic Games after it stopped allowing the downloads of the Epic, basically Fortnite on the App Store. Apple notched a victory in its battle with the Fortnite publisher Epic Games when a three-judge panel of the US Court of Appeals for the Ninth Circuit issued a stay, pending appeal, of a lower court order that will make it easier for software developers to route around Apple's payment system for in-game purchases. Okay. The court also said Apple has made a sufficient showing of irreparable harm, and that the remaining factors weighted in favor of staying the provision of the lower court injunction and maintaining the status quo pending appeal. Apple said it was pleased with the ruling. Our concern is that these changes, Apple said, would have created new privacy and security risk and disrupted the user experience customers love about the App Store. We want to thank the court for granting this stay while the appeals process continues. Being granted a stay is a win for Apple, as the possibility of the company being forced to allow developers to include in-app links to other payment platforms has been pushed out, the analyst wrote. We would note, however, that the overall appeals process outcome remains uncertain. I don't know whether Apple will win this lawsuit, basically, and there's problems on the court with Epic Games at the end of the day. No one knows, but I doubt it. The pain isn't over for big tech stocks. That's bad for the S&P 500. Let's read this real quick. Don't be fooled by big tech stocks rise. There could be more pain spelling additional trouble for the S&P 500. There is no denying that these stocks are on the up again for now. Apple, FB, Amazon, Netflix, Google, Microsoft, Tesla. My favorites on this list is Apple, Google, then Tesla, and then Facebook. Right now, I only hold Google. Right now, have always in between 3 and 10% from the low points reached in their recent pullbacks. Stocks had been sliding from mid-November until late last week. As the Fed signaled it might move sooner than planned to halt the bond purchases it has used to prop up the economy during the pandemic. Less money moving into long-dated treasury bonds allows their prices to fall, all else being equal, pushing yields on the debt higher. Those higher interest rates reduce the current discounted value of future profits, and investors in these tech giants are counting on big profits many years down the line. But it's far from certain that the pain for big tech stocks is over. The Fed's change in stance, we're talking about the pain right now that I called earlier. I said today, tomorrow, the market will be very nervous, will be kind of anxious because we are waiting for the CPI data on Friday. And Jerome Powell is also speaking on the next week. So the market will have a hard time accommodating with that, dealing with that actually. Less bond buying means slower balanced growth, which makes a difference for big tech stocks, according to Bank of America. Its data show a close correlation between the size of central bank balance sheets and big tech valuations. So basically that means as the balance sheets of the central banks grow, then the big tech valuations grow. That means as the Fed is buying more securities, more assets, more mortgage-backed securities, and treasuries, then the big tech valuations grow. There is more, the market cap of Google grows, the market cap of Apple grows, etc. Let's move on. And the aggregate size of the balance sheets of every balance sheets of every central bank has flattened out at about 25 trillion, while the market cap of the big tech stocks has continued to rise. The problem is that based on history, a central bank balance sheet of about 25 trillion implies the aggregate market capitalization for those big tech stocks of around 9 trillion. According to Bank of America's data, that would mean a decline of about 20% from the current 11.3 trillion valuation of these big tech stocks. That's interesting. That's interesting. Okay. A separate indicator also hints that the best. So what it says here is that maybe right now big tech stocks are ahead of the actual value that they should be based on the Fed's balance sheet and might need to correct a bit. That's interesting. A separate indicator also hints that the best of big tech's outperformance may be over. The group's gains have outpaced the S&P 500 by so much recently that its total market cap is now the highest portion of the S&P 500's total value since August 22. That, of course, was just before the big tech stocks all experienced corrections or declines of at least 10%. Before that, the last time big tech was so large compared to broader market was in 2000, before the dot-com bubble burst. I mean, if you take a look at the P's and the valuations of those companies, let's go back to the stocks. Or if you take a look at the valuation of Google, of let's say Apple, let's say Nvidia, you can call that Nvidia big tech right now, of FB. What looks more overvalued right now is Apple, above all. Netflix always looks overvalued. Amazon has a high PE because it's investing a lot of money back to its business and it's growing. A lot of people anticipate a lot of growth on Amazon. That's why it has a high PE. But if you check Google's PE, if you check Facebook's PE, they're not that overvalued compared to their historical PEs. Tesla is always overvalued. But yeah, some look overvalued, some not. Microsoft also is overvalued in one way. Let's move on though. A poor performance by big tech could, we read that. That is also, where are we? If the S&P is to post solid gains from here, it will need help of stocks outside of big tech. That is also far from a certainty. The percentage of New York Stock Exchange listed stocks that are trading above their 200-day moving averages was just under 50% as of Monday, compared with close to 100% during the best times, according to Morgan Stanley. If so many stocks keep trading at such low prices, the S&P 500 should fall about 8% from its current level, the bank's data shows. One positive is that the S&P 500 has risen about 4% in the 4 trading days since the low of its recent pullback. This week, the vast majority of stocks in the index have participated in the rally. That is a good sign, but investors will need to see the index stage a broad rally for longer in order to have a confidence in the gain. I mean, at the end of the day, if you take a look at the S&P 500, let's take a look at the S&P 500 together to see why things can be scary, but at the same time, things look like they will always keep on going up. S&P 500, let's go back and look at the chart of the S&P 500 for the past month. Past month, we are flat, basically up. How up are we in the last month? Give me a minute here. Last month we're up like 1%, let's say 1%. Last 6 months we're up a lot more. That is 10%, I think, or not. Let's say 10%. Year to date we're up a ton, man. We're up a ton. How long can this keep on going? The central banks are still printing, right? They haven't stopped printing. So that's one thing to keep in mind. So one could say that as long as they keep printing, the valuations of those big tech stocks will keep going up, bring the S&P 500 up. But we have those more and more tests trying to break below this upper sloping trend, but we don't seem to be able to, and we always recover from the dip. I don't know what will happen, but things are looking bullish and scary at the same time. The higher they get, the riskier they get, not the safer. Anyway, that's why many people struggle buying those prices. Inflation data lie in wait as the stock market's next nemesis. Let's see that real quick. It's a small article. It is a new worry. The 3 major US indexes are near enough back where they were before Omicron fear set in. Now they need new instructions for where to go next. Those instructions are likely to be around the corner in the form of Friday's Consumer Price Index reading and subsequently the Federal Reserve's meeting next week. A faster pace of tapering is widely expected after Fed Chair Jerome Powell said it would be discussed last week, concluding that process by March would pave the way for interest rates increases if and when necessary. Powell's sudden hawkish pivot was a surprise, but it did at least give investors forewarning. When it comes to inflation, economists expect a CPI print of 6.7% year over year. Anything much stronger than that may raise the possibility of earlier than expected interest rate increases next year, halting the market's recent rally in its tracks. Basically what we talked about earlier. Let's read this. Alibaba stock looks like a screaming buy. Do it at your own risk. Here are the facts. Alibaba has dropped 46% in 2021. Man, that's scary. A terrible result no matter what the rest of the market is doing. It's made worse by the fact that the rest of the market is doing quite well. The S&P has gained 25% while Google and Amazon, most similar to Alibaba, have gained 69% and 8% respectively. It's no secret why Alibaba stock has been decimated as much as it has. Like whatever, we are reading an article about Alibaba every day at this point. Whatever those articles say, at the end of the day, yeah, this is an article from like 2 days ago. Alibaba stock has its best day in 4 years. Why it's rising again? Why when the day went rise 10%? At the end of the day, whatever these articles say, Alibaba is still looks relatively cheap. Still is a great way to diversify your portfolio. Still looks like the tip of the spear of the Chinese market. Look at this. The PE of Alibaba right now is 17.6. The historical PE of Alibaba is around the average historical PE. Let's check it together. Take 1 minute, then I will close the live stream probably after we check the stocks. The historical average PE of Alibaba is around, let's see if it loads. Google seemed, by the way, to be going higher. It touched, as I told you guys, at 28.20. I hope you bought the dip there. I did, at least I did. And now it's about to, it's probably either looking at 3,200 or we'll probably test 2.9K again on this Friday. Nobody knows what will happen. That's what I expect though. Apple is at all-time highs. I mean, look at that. With Apple being at all-time highs, it will need to correct. Some people might take profits at those prices. The higher, when a stock is setting all-time highs, some people usually take profits. And why they wouldn't do that on Friday when the CPI data comes out and there will be fear and panic around the market waiting for the results. Anyway, back to the historical PE of Alibaba. Look at that. We are at the lowest that we have ever been, 14.8. 125 price per share. 14.8 historical PE right now. And the historical PE stays around from 18 to let's not say 50, let's say 45, let's say 33. The historical PE stays from 18 to 33, and right now we are at 14. That's a mic drop right there, and that's how we close the live stream for the day. Alibaba is the stock I'm still DCAing into, and I believe in its long-term performance, despite the dip that it has. It presents a great opportunity that I'm willing to take advantage of and take the risk for higher returns. Anyway, guys, hope you enjoyed today's live stream. I'll see you on the next one. Hope you had a great day, and peace.